Hello everyone, and welcome to my first video. I'm Mike, and I've been investing for about 3 years now. I recently got to the point where the dividends I'm receiving are averaging $120 per month. That's a big milestone for me, and as you could imagine, is very exciting. I'm collecting $120 a month for doing absolutely nothing. It didn't start out like that though. I first invested $1,000 in XTR, which is an ETF, an exchange traded fund. A friend of mine told me about this stock, and because it's an ETF, the price doesn't swing as much as individual stocks, making it a great starting point. So I had $1,000 in XTR, and a month later I received my first dividend of $5.80. And the next month, $5.90, and $6.05 after that. Even though $6 isn't a lot of money, seeing that snowball effect of reinvesting the money and the next month getting more than before got me motivated to invest more money. From then on, I put 15% of each pay and more when I was able to, and 3 years later, I have $25K in my tax-free savings account and $11K in a family registered education savings plan, FRESP for short. For those of you who don't know, an FRESP is an investment account for post-secondary schooling and has two really good perks. One, your money grows tax-free. And two, the Canadian government matches up to 20% of your contribution, up to $500 per child per year. So each year, I aim to contribute enough money that I get the full 20% from the government. And with 2 kids, that equals $5,000 per year. So in March 2020, when something happened,
reiterating the need to limit travel and self-isolate during this health crisis.
This is our chance right here, right now.
The Prime Minister says nothing is off the table to slow the spread.
And the market crashed. It was a great time to invest. As Warren Buffett says, be fearful when others are greedy, and greedy when others are fearful. And in March 2020, people were definitely fearful, so I was greedy. I decided to take money out on my line of credit to max out my FRESP for the year. Then in April, 2 very interesting things caught my eye. 1, I was paying $20 in interest, and 2, I was getting paid $30 in dividends. And that wasn't even including the dividends from the money I had just put in. That was the point when I had the idea to borrow money from the bank and use the dividends to pay it back. So now let's run the numbers. I'm going to borrow $65,000 and pay interest of 2.95%. That's going to come to a monthly bill of $160. So now I'm going to take that $65,000, invest it for around 7%, which is going to give me a $380 dividend per month. So the $380 minus the $160 I need to pay in interest is going to leave me with $220 that I'll be able to pay to the principal. Once the loan is paid off, I'll have a free $65,000 and I'll be getting paid $380 per month. And that's not even including that chances are over the period of time it takes to pay back the loan, companies will raise their dividends and the value of the stock will rise. Now there is one huge risk, and that is companies cutting their dividends. Now sure, that could happen, but as long as I make enough to cover the $160 interest payments, that's all that really matters. That means that the companies I buy could cut their dividends in half and I would still be fine. So there it is. That's what I'm planning to do, and we'll see how it goes. I'll make another video in a month or so to update everyone on the status of the loan and investments. Thank you all very much for watching, and take care.